What up traders, what up investors, Ken here from the Dyslexic Investor, and thank you for joining for another fantastic video. Today we're going to be looking at the model of buying very long or out of the money calls and seeing how that affects your portfolio with the IV crush. The example we're going to be looking at is a particular Wallstreetbets post from a hunter tag, was it 457? I'll post the original article in the description below. Basically, this individual has basically the title of the post was like, and now we play the waiting game, and not wanted to judge anyone, but his battery is a little bit low, so hopefully he finds a charger ASAP. That being said, he just shows his options positions, and we from the top to bottom we see Tesla call, we see another Tesla call at 3,000, we see a BA call, and then a CCL, which is Carnival Cruise Line calls. The BA and then the CCL calls are all the way out way in September, October, and the other calls that we're looking at are basically the end of August and the first week of September for Tesla. So that being said, let's go ahead and jump into Tesla with this again. Tesla being in the news for quite a bit for reasons in the sense of potential the battery day and of course that mega split coming up at the end of the month in a couple days here. Basically a 5-for-1 split. Again, there is no free money in this. Please just look up how a split works. The value is still the same, just your quantity of shares will increase. That being said, let's go ahead and look at Tesla on the technical side. Here on the daily side, from the previous swing high to the previous swing low, these Fibonacci retracements were really kind of hovering around that 1618, what we kind of looked at potentially for some overhead resistance on this whole ride up. That again with the meme of once it splits, getting that 420 meme, that is honestly somewhat of a real a possibility of getting around that 420 split level if we close around the 2100-ish range. That being said as well, so be very mindful of how the split overall turns out. The next overhead target we really have is around $2,500. That's again, it's $400 from here. Not saying that that can't happen, but it's very unlikely this is going to happen in a couple days. And especially if we go back to the individual calls, this guy is or lady is saying by Friday that call, the 2600, which we can look here via the trade tab on highlighting that on this Friday, saying the 26. I don't even have it on here. That's how far out of the money it is. Let me just do 100. That should give it to me. There we go. So the 2650 call is right here. We're seeing it has a delta of 0.01. So that basically allocates the percentage of it possibly being in the money. Not saying you can't make money off of it, but you see that IV crush really coming in, and it's down. That call just today is down 35% as we speak. Of course, the overall percentages increases because again, we're going again. This options expires in 2 days, and they're saying the plus or minus move is $115. So again, we're nowhere near in that range. Again, anything can happen with Tesla. Just be very mindful of that. I'm not saying to put all your money in this particular call. I'm just giving the example of how the theta can really just turn up really high and just really kill that call and just take all the value out of it. And that's what we call time decay. We call that theta. That is really what is happening here on that particular call, being again down 35% because it's not the probability, and the market makers are allocating it. This is most likely not going to happen, so we're not going to add that value, aka that theta. So you can see that there's still quite a bit of volume and open interest, but again, could just be selling these calls for collecting premium and just waiting for that overall IV and basically premium to be sucked out of it. For this to be able to make a substantial gain, this would, of course, the stock price would need to move up substantially in the next basically 24 to 48 hours to see that increased volume, to really see, again, that IV being pushed down. Because, again, we're all the way up here. Currently, stocks trading around 2110, so $2,110. Again, that's really far away. And then the other example that individual had for the IV crush is basically looking at Tesla 3000, but he had on the September 4th options. So this is even further out, but he gave himself a little bit more time. But we're sitting at a 4% probability of profit. The probability of profit, or the delta we call it, is the probability of it being in the money by the time of expiration. That doesn't mean he can't make money if Tesla decides to move up $300-400 in the next 3 or 4 days. This could gain volume could gain increased value depending on what price he bought it at. This is not disclosed on how much he paid for it and so forth. But again, this option's only down 7 or nearly 8% here. It's a 4%, but you can kind of see here that theta is really kind of kicking in and really taking some of that premium out of it. But again, we do have that FOMO mentality building up as we can look like at the chart within Tesla. So again, we had that huge run up since that split was announced and just been really grinding up the 5 exponential moving average and not really looking back. Kind of hitting like a head fake here around again that 1618 here around the 2075 potential level. If we can, most likely could look like we just hold this line potentially into the split. But again, anything can happen. We're somewhat highly elevated RSI and volumes on oscillators kind of coming down. We're seeing a little bit of a dry up of volume the past 2 or 3 days, not as the amount of increase we've seen over the past week on this huge run up. Again, I think most the people, the FOMO has just really kind of settled in and kind of see on, especially on Friday, to see how this particular close, because on Friday we could have multiple gap up, gaps down, and be very mindful. We also have the Fed chief Jerome Powell speaking on Thursday that could really drive the market in either direction. And the next stock that this individual had, but he had a little bit longer dated calls, was on BA. So with this one, he had the 240 call that was expiring October 16th. So we can kind of look at that one here. That's, again, he's giving himself 51 days compared to 2 days. So that we're going to look at the overall difference of that. But again, it's still a 240 strike price. That's still some far out there. Again, this is about a 12% probability of profit, aka it being near or at the money by the time of expiration. That being said, this one, I guess, BA has a little bit not as, it's still volatile, but it's not like a Tesla or an Apple that we've seen just can be constantly running up. And again, looking at that 12% chance, trading for around 217 to 240, let's just call it 230 for that particular options. Kind of looking here on this chart here, it's just been, it had a pretty large move higher again with the overall pandemic, the potential comeback, but then really retracted back quite a bit, came down to the 21 and 34 and just traded sideways for some time. You basically see what the parameters that I have. To the downside, I'm looking for 163. To the upside, I'm looking for above 193. Looking for that, basically just kind of trading in this range. This individual, again, has it at 240, so we're looking well past that previous high just by a little bit. That 240 strike price being well above the 200 EMA, but on the way up, we're going to be having some potential resistance again, especially around that 200 EMA, so around 217 to 215, we could see some overall pressure coming into that. Again, 51 days, that is basically somewhat of an eternity within the stock market that we're currently trading in with the amount of volatility that we've seen in the overall movement. That being said, he's still buying these calls out of the money, and he's really just hoping for something drastic or the stock to continue to rise up, and really needs to rise up quite substantially to be able to make a decent amount of money. Not saying that he wants to make a 10 time or 10x, but again, we're talking about Wallstreetbets, so that's not going to be the most most likely will hold until it goes to zero, or just hope for a 10 banger as they call it. With this, again, that $12 percentage, $12%, again, down 17.5% today. That being said, if we do get a large move within BA, that options can easily increase in value substantially and go up to at least $3 to $4 plus, and basically become like a 100% gainer in a very short period of time if we do get some movement and some volume coming into BA. And last but not least, this individual had the CCL, that's going to be Carnival Cruise Line. He also had the October 16th, he has the $20 strike price. Again, that's kind of where we're looking for the potential move to go if all things go out. Again, this is going to be substantially less aggressive and less lack of probability of happening, like we just talked about with the BA. So going over to the trade tab, October, we're looking for the 20 call, and boom, it's a 30% chance. And look, it's only Again, these strike prices are about 250 wide or $2.50 wide. This is again substantially closer to being in the money. So yes, it still only has a 30% chance, but again, it's a little bit closer. So if the stock does decide to move, that delta at 30% will actually increase a lot more value than it would if the delta was a 3 or 5 or even anything below that. That premium, that overall value in that would increase, and that could push it into being in the money and getting that value that this individual is looking at. That being said, where could be looking at for some support and resistance on CA? So, CCL. Looking for basically Carnival Cruise Lines. Again, as they all know, the pandemic and the virus has really hit this industry quite hard. We're seeing a lot of potential, some overhead resistance around 1758 to the upside. That was the previous high just recently ago. And then we're seeing some more resistance around the $20 to $19 level, which is this is an individual trying to look for. That being said, this is a little bit more of a, again, both these all these trades that we're looking at, the Tesla, BA, and the Carnival Cruise Line, is basically saying that all these stocks need to go up higher. All these calls are out of the money, and that theta is just going to kill it. So giving yourself more time is the best possibility to do. Being said, I'm not a huge fan of just buying straight out of the money calls. Even in the short term, you would need at least 30, 60, maybe even 90 days to kind of have those particular workout. You'll see a lot more consistency of profit if you start buying options that are in the money slightly or even above that 60 to 70 delta. You will get that a little bit of higher probability of profit, and at the same time reap more of the rewards a little bit faster than just trying to put in some of those lottery tickets, as I call it, of those calls way out of the money. They're basically out of sight, out of mind kind of scenario. Again, guys, thank you so much for watching. Please don't forget to like and subscribe. If you learned something, smash that like button. If you're interested in joining the Discord, that link is down in the description. We also have a fantastic Patreon page and the YouTube join button if you want to directly support the channel. And again, guys, thank you so much for watching. Hope to catch you guys on the flip side. Peace.